Guys? Welcome to another edition of Market Marauders, beating the market one trade at a time. If you're new to Market Marauders, it's an investment channel, helps you find the best deals in the market. If that's something you're interested in, make sure that subscribe button down below, like, comment, and share. Now today I'll be going over my options watch list for the week. Just bear in mind, I am not a financial advisor. All these picks are my opinion, speculative. So just bear that in mind if you want to buy and sell stocks. Make sure you go talk to a certified CPA. And also, this is going to be with perspective from the Robinhood platform and the Webull platform. So if that's something that you want to do, if you want to join those platforms, I have a link down below where you can sign up and get 2 free shares. So just check that in the description. With further ado, jumping into a number one for the week, we got ticker sign F for Ford Motor Company. Zooming into the chart. Bear in mind, I'm also using the 1 minute chart. Some people use 5 minute, 15 minute, 30 minute, or 1 hour. I just like the 1 minute because it's a little more detailed. In my opinion, it shows more dramatic moves. Also, I have the moving average 10, 50, and 100. Those are the metrics that I like to use for analysis, for chart reading. So it's also bear that in mind as well. Starting with the Webull platform, we can see that on here the moving average 10 has broken through the moving average 50 and the moving average 100. So to me, that begins the bullish pattern. Once it goes and breaks up towards the positive range, the moving average 10 line, then to me that denotes that a bullish trend has begun. So with that being said, I think the stock is very bullish. If we see at the bottom of here, the volume definitely increased towards the end of the day, which is always a good sign and a good setup for Monday morning when it opens. Moving average 10 is 610, moving average 50 is 607, and moving average 100 is 606. It ended the week at 610. So above its moving average 50 and its moving average 100, and right at its moving average 10. So pretty good metrics as far as Ford is concerned. But on the channel, I like to give some background information on the stock as well and see what is causing this move and future moves as well. Going into some background information, some moves that the company is making is next week they're going to be announcing the Bronco. Now, if you're not familiar with what the Bronco is, it is a basically SUV, sort of like a Jeep, but not really. Famous by the O.J. Simpson trial. If you're not familiar with that, just go look it up on YouTube. O.J. Simpson's a football player, and he drove a Bronco in a high-speed chase, and the car basically became famous after that. Production kind of died down after that. I don't know if it was because of that, but it died down after that. People really weren't looking for it too much, but it was a very popular vehicle back in the day. Now they're re-releasing it, so to me, Broncos are definitely one of those vehicles that are kind of like the Mustang, in my opinion. They kind of have their own cult following. People really love the Broncos, back in the day, and there's still some of the old ones, rolling around the roads today. Um, and so, I think there's definitely a market for it. And then also new people who may not know what it is, who are also, interested in that as well. So just has a couple videos about it, just explaining what's going on. This is the old one. If you see, this is the very old one. So it was like a family, sedan. You can tell it's very old because it doesn't have any back doors. It's 2-door, but it has back seats. So, before, in my opinion, Jeep became the end all be all. To me, it kind of was Bronco. It was bigger, more powerful, in my opinion. But yeah, with that being said, I think a call is the best option. Now, if you're new to options in general, I'm just going to give a small breakdown on how options work. The left-hand side, this is on the Robinhood platform, by the way. On the left-hand side, you have the strike price. So this is the price you believe that's going to get to, whether that's in the positive or the negative. I think a call is the best option. So a call basically means that you believe the position is bullish. A put means that you believe the position is bearish. So bullish For call basically means going to go up positively past this number, which is the strike price, and then bearish means you believe that's going to go down below that price in the opposite direction. So on the left hand side, the strike price, these are what you call out of the money options because they have not reached the strike price of $6.07. So this is where the share ended. So once this stock goes up to $7, then this $7 strike price will essentially be called in the money. So everything below the share price is called in the money, hence why they're more expensive than the ones that are out of the money. Now on the right hand side, a way to read the price that you pay. This is per contract. A contract is basically you're agreeing to buy 100 shares of a stock at a specific price. So just bear that in mind. One contract is equivalent to 100 shares of a stock. Now the price on here that you would pay, this says 9 cents, but it's not really 9 cents. The price you would pay would be $9. So if you bought this contract, it would be $15. You bought this one $24, and then if you bought this one that was in the money, it'll be $135. So that's a small breakdown of what options are, how much you're going to be paying. I don't sell options, only buy options. So I don't sell calls or puts, only buy calls and puts. If you would like to learn more about that, you can go on Investopedia. They'll explain how options work, about the gammas, thetas, and deltas, all associated with it, which are these other metrics. But just giving a small rundown on how I'm picking options and how I'm choosing these for the week. So with that being said, I think a strike price between $7 and $10 is a good strike price. You'll be looking to pay between $66 and $15 on the Robinhood app. I think expiration for January 15, 2021 is definitely plenty of enough time for this action to actually happen. Definitely considering that the fact that in a couple of days they're going to be announcing the Bronco. They already announced the electric Mustang out there. So, two basically revolutionary vehicles coming from Ford. So even though, they're shutting down factories in a lot of different places, they still have a lineup of, pre-revolutionary vehicles coming out that could definitely help get the Ford name out there, as well as their other vehicles like their trucks and things of that nature. Going into the Webull platform, going into the option side, we're gonna look. We have January 15, 2021, and then we set a strike price between $7 and $10. So for $7 on here, the way that the platform on Webull is set up is you don't have to click on different tabs. Just the left hand side is calls, and the right hand side is puts, and all the strike prices are in line from greatest being the bottom to least being the top. And then in the middle of this line is representative of the share price where it ended the week, or the day. So just bear that in mind. On the left-hand side, this column right here where it says bid, this is actually going to be buy. If you hover over it, it says buy. So it's the same as the buy tab on Robinhood, as well as this side is the buy. So this will be buying a call. This will be buying a put. The ask side is actually sell. Then the ask side on here is actually puts. So, this is selling calls and selling puts. And then this inside line on both of those is buying calls and buying puts. So we're going to be interested in buying a call. So between the $7 range, as you can see on here, is $65. On For the $10 call, it's going to be $14. So between $65 to $14 is going to be the price that you'll pay for that call on the Webull platform. Now jumping into my second one. We have ticker sign SNE, and this is for Sony. Sony's definitely making some big moves in the market. If we can see their moving average 100 line is kind of um, exponential, a little bit bearish, and their moving average 10 lines kind of bouncing in between being bullish and bearish. But, as far as it goes, seems to be positive on all three metrics. So let's dive into where they ended. So they ended the week at $73.94. Their moving average 10 is 73.94. Their moving average 50 is 73.94, and their moving average 100 is 73.84. So their moving average 10 and moving average 100 has definitely converged to be the same price, and it is also the price at which it ended. So you have three convergences at this one focal point right here. With all three of those numbers meeting, so it's going to be interesting to see, how that performs. To me, it's come down and it's testing this resistance line at the moving average 50, in my opinion. So you know if it'll bounce off this moving average 50 line, then to me that begins a bullish trend. But if it goes down and crosses below this moving average 50 line, then to me that will begin a bearish progression downward. So we'll see how that behaves as far as next week is concerned. But let's jump into some background information on them. So Sony recently has made a $250 million investment in Epic Games. If you're not familiar with Epic Games, they're the company that makes Fortnite. Fortnite being a very popular game with a lot of people, young and old. One of the best games out there as far as popularity is concerned, in my opinion, and definitely whole channels on YouTube and groups of people and forums have been made around this game. Um, and the fact that Sony has put such a large stake into the game, especially with the release of their new console coming up pretty soon, has definitely raised some eyebrows in my opinion. Considering the fact that it could help their platform, in my opinion, as far as venturing their partnerships with this company. Um, you know, Epic Games definitely has Fortnite on lock, and once you kind of jump into the Fortnite market space, you definitely have access to a large range of customers, people who play the game, who definitely have money to spend. So very interesting move by Sony, in my opinion. And I think it can definitely yield them to be more profitable in the future, especially if they have some exclusive Epic Games or Fortnite collaboration that is just a Sony exclusive. I think that can definitely be a deal breaker for a lot of people between going with the Xbox system over the Sony system if that's the way that they're moving. Going into with that being said, based off that information, I think a call would be the best option. We're going with the expiration date again as the January 15th, 2021, with a strike price between $75 to $90. So we see right here it is at 73.90. So we're in it the week. Bear in mind that these prices on the right hand side definitely change once the market opens up, but these prices on the left hand side don't change. So the strike prices are the ones that are most important because they're stagnant prices. On the right hand side, the price you pay are definitely going to change based on the share price, especially if this goes, if this goes up this week in the money, which will make this more expensive. If it goes down, it may be a little cheaper because to be further out of the money. So just bear that in mind. On Monday when the market opens, these prices on the right hand side will be different. This is just to give you a range of prices that you may be looking to pay if you wanted to set some money aside. So the price that you'll pay for those calls will be between $173 to $620. So not too expensive of a range as far as that's concerned with stocks, especially considering options. But not the cheapest ones as well. Definitely a little more expensive than the Ford ones, but middle range as far as options are concerned, in my opinion. Going into the Webull platform, we're going to look at options on this side. We're going to type in ticker sign SNE for Sony. And then we're going to go to the date. Let it load a little bit. We're going to go to the date of the 15th of January. And we have a strike price between $75 to $90. So just scroll down a little bit. All right, so $75. Remember, this side on the left-hand side is all calls, and the first strip right here is going to be buying calls. So we're looking between $610 down to uh, $155. Okay, sorry. I was trying to focus on that. So $155 to $610 is definitely going to be your range on prices to buy using the Webull platform. Now, both these platforms are not one to one, so the prices are going to be different, and also the amount of people selling are going to be different based on whatever platform you choose. So just bear that in mind. It's not a one to one thing because these are two different platforms and two different markets. So just bear that in mind if you're looking into using both platforms or which platform you want to use. Jumping into my last one for the week, we got ticker sign NFLX, and that is for Netflix. Netflix has been on a pretty bullish run, in my opinion. They went a little bit bearish, but it seems like they're recovering to be a lot more bullish. Even though there was a large sell off, it seems like, right here towards the end of the day. Bear in mind, this is a 1 minute chart, it may be a little dramatic, but to me, it seems like this is a very a large number of sell-offs. Moving average 10 is 548.94. Moving average 50 is 546.97. I mean 79. And moving average 100 is 546.61. They ended the week at 548.73, so they're above their moving average 50 and moving average 100, but below their moving average 10. So not all the way bullish. I mean, not all the way bearish, in my opinion. Still bullish because the moving average 10 line has definitely crossed the metrics of the moving average 100 and the moving average 50. But we'll see how long that bullish pattern can continue. Now, jumping into some information from them, they do have earnings coming up. So their earnings is going to be next week, next Thursday on the 16th. If you never looked at a company's earnings, it's free information. Anybody can join. You just click this link right here. Go to Google and then Google Netflix investor tab or just Netflix investors. And then you'll come into the investor relations tab on their website, and then you can click on this link. And then on this link, you can go into the investor tab. So it'll tell you it comes out 1 p.m. Pacific time, and just loads of good information as far as that's concerned. They answer a lot of investor questions sometimes, and they also go into depth and what they have moving forward, plans for the company, maybe give some new shows that they're doing or new things as a business that they're doing moving forward. Most important part of that is the financials, because a company with good financials definitely is always a good investment, in my personal opinion. And definitely interested to see how they're performing, especially given all this quarantine stuff uh, going on. So, with that being said, going into the options. I would say options with the expiration date of the 15th of 2021, just like the other ones, between a strike price of $560 to $610 is the best option. So you're going to be looking to pay between $5,135 to $6,903. So this is definitely on the top end as far as budgets are concerned with buying options. But different people have different amounts of money, so I can't say hey, these options are expensive, these options are cheap, because everyone's risk management is different. Now, how risk management plays into buying stocks is basically you allot yourself a certain amount of money that you're willing to spend on different plays, and then you see how that works. The way that I do it is I basically set aside a certain amount of money that I want to invest. After pay bills and all that other stuff. Um, you know, make sure your necessities are taken care of, and then I have a set amount of money that I put aside that I use to invest. So I kind of basically budget the money that I use to invest, and it's worked for me. Definitely, you may be FOMO on a couple of things, so that always happens for new and old investors. You see plays happening, you may not have enough capital to go and jump onto that play, but it works out in the end if you have a cap on how much you're willing to spend, and it also encourages you to grow what you have in your account to higher values, so that you do have more money and that you're not missing out on those opportunities that come into the market. So with that being said, going into the Webull platform, going to the options section, we're going to type in ticker sign NFLX for Netflix. And for some reason this doesn't load. We're going to January 15th, 2021. We have 560 to 610. So it's going to be, pretty close to the bottom. So 560. I don't know why this is cut off. Can't really read that. So at 610, we have $4,950. At 560, seems to be that this number is cut off and that you cannot read it. So we're going to go with the other number, which is the 580 strike price, which is $5,970. So a little bit different range as far as how much you're going to pay on the Webull platform compared to the Robinhood platform. But also bear in mind these are based on when the actual market opens. So it's all based on this line right here. So all these options right here are what you would call out of the money options because the strike price has not gotten to these values. But once they become in the money, which is the above section on the Webull platform on this specific stock, then they're going to be a little more expensive. As you can see with these, but bear in mind, risk management is always the key to grow your account. Don't be afraid to, cut your losses if something is going down. Always use your stop losses, and then, make sure you take profits when you can. And, those things will take you a long way as far as trading is concerned. Stop losses will definitely save you. Me, I don't have time to sit and just watch stock all day. I have other things that I do, but some people, if they have that time, you may not, stop losses may not be as important to you, but you know to me, the best thing is always have your entry and exit planned before you make any position. It definitely save you a lot of time. Have a target goal for how much you want to make in profits, even though it may go up further than that, or it may not reach that. Always, if you could take profits, even if it's not as many profits as you think it would be. So, don't be greedy when it comes to options because they can fluctuate, by the minute. You can go up a crazy amount on options and get a lot of money, or you can lose the same amount of money, going down in the negative. So, bear that in mind. Always use risk management and, repeating the story from last week's video, there's an investor who sadly committed suicide from having his account so far in the negative. Um, Very tragic story, but try to reach out to people. Go look at on videos. Try to get as much information as possible when you're doing options because it is very risky. And you can it is very risky and very stressful for positive and stressful when your accounts go to the negative. So just bear that in mind. Try to get as much information as possible before you make these positions. And if you really need to consult a financial advisor or someone who has the knowledge, watch as many videos as you can before you make those trades. Tell me what you guys are looking at this week as far as options are concerned. Drop a comment down below. If you want to join the platform Webull, if you want to join the platform Robinhood, I have a link down below for that. And I'll see you guys next time. Peace.